Now, there are different types of life insurance. One of the proprietary programs that have been put together is what we called in the old days the single premium life policy. And this is a tremendous way for somebody that has fixed money. I'm not talking about anything in the stock market. I'm not talking about in a hedge fund or private equity. I'm talking about fixed money. Monies that you're earning 70 or 80 basis points in the bank. Monies that you might be receiving 1.5% in treasuries. Monies that might be in bonds, and you're concerned about that as interest rates go up, the value of your bonds end up going down. Ladies and gentlemen, there is an approach whereby we can take a sum of money, actually up to $10 million, and put it within a life insurance policy, but don't think about it as life insurance. This is a place that is based on an indexed universal life insurance policy, meaning the following. You put money in, your interest crediting rate is based on one of two indexes that revolve around an S&P 500. And there is a cap. Sometimes it's 8%, different times it's been 7, at different times it's been 9, but there's a cap, let's say, of 8 right now. And on the other index, there's no cap. These aren't indexes to make huge monies with, but they are protected, meaning if the market goes down, you don't lose. There's a minimum of 2.5%. Now, you put your money in at the end of a calendar year, or the year from the time that you put your money in to the next year, point to point we call it, it will be determined what your return is. And if the market, S&P for example, did 8, you'll get 8. If it did 12, you'll get 8. If it did 0, you'll get 2.5. Now, there is a cost that comes with this. What's the cost? It's roughly 1.8 to 2%. That's the cost of administrative charges as well as mortality, the cost of the insurance. And yes, there is a little death benefit. That's not why we're buying it, but there is a little death benefit there. And the idea is that now, for monies that I had sitting in the bank on the sidelines that was really earning no money, I have the ability of making maybe 2%, 3%, 4%, 5%, 6% net. Maybe. But worst case, I know I should be able to net at least 50 basis points, 60 basis points. But the beauty of it is there's no penalty for pulling your money out. It's fully liquid, 100%. You can take your money at any time. Now, obviously, if you take your money during the year, there's no pro rata on interest rates. You got to wait the entirety of a year to get your interest credited. But at that time, you can take your money and go. Of course, there'll be tax implications, ordinary income tax, so on. But while the money is sitting there, it does grow tax deferred. And as I said, if you happen to pass away, there is a tax-free death benefit. Something you definitely want to inquire about. Again, for monies that are sitting on the sidelines that you want to keep safe and liquid, this might be the right program for you.